Hi, everybody. Marty Mazzora, May 10th, 2016, your first of the week update. I think what I'm trying to do is get into a trend where I come to you like on Tuesday and then again on Thursday. Usually you get the TV segment on Wednesday and then the commentary over the weekend. Of course, if anything really weird happens during the week, um, I can come in more often, and I could do less on the quiet weeks. Today wasn't quiet. Today we had a big rally in the market. Dow was up 220 some points, 1.2 or 1.3%. Nasdaq and the S&P were up the same on a percentage basis. Very strong, well participated across all the sectors. Just a great, really great looking rally. I was very surprised to see such a strong rally right now. Um, to drill down a little deeper, utilities kind of lagged, but they were still up. Interesting that bonds didn't sell off much, meaning bonds kind of held in there. You would think perhaps bonds would fall in price and yields would rise on such a strong rally, particularly a rally that was strong in the more growthy sectors, if you will. So what caused it? Nothing really jumps out. Overnight, the Japanese yen finally gave up the ghost a bit against the dollar. That's been kind of problematic for Japan. And so we saw the Japanese rally or Japanese stock market rally pretty hard last night. That kind of, I think, rippled through most of Asia. Went on into the European open, and Europe had a nice day today, and it just continued to ripple right into the U.S. Of course, it was more than just Japan, but if you look at it, if you step back and you look at what's going on outside the U.S., I think the notion that we have some global recession on the near-term horizon is losing its luster, if you will. I think it's losing its devotees, and money that came into the year very skeptical is now beginning to wonder if maybe it shouldn't participate in the stock market. Now, today's volume was not certainly anything to write home about, so that also would suggest that maybe this wasn't quite as strong a rally, or it's one thing that would suggest that, in that relatively low volume wasn't bad, but it wasn't great. On a big rally, if you want it to be great, you want to see really huge volume. So if it's not big volume, what it suggests is you had more of a lack of sellers as opposed to this giant rush of buyers. There just wasn't any reason to sell stocks at yesterday's prices today, so they got bid up before they could entice any sellers to let go of their shares. From a technical standpoint, if you want to view the chart in front of you there, let me get a little of this out of the way. Um, looks good. I mean, 2080 was talked about a lot today by the technicians as resistance. You can see that the S&P closed at 2084, so that was good. Needs to hold that and needs some more follow through. You can see it's threatening this longer term trend line here, which it had some success with and then gave up on here, over the last couple of weeks. And so we've got a few wedge patterns to contend with if you're a technician looking at these sorts of things. Just above the 20-day moving average, that's good. You can see how that's been both support and resistance over time. Back on the downside, 2050, 2038 are going to be key levels to look at. Let's just do it for fun. I can give you those retracement zones. If we want to just kind of trace this rally up, most rallies don't just keep going up and up and up. When they retrace, they tend to stop. If we're still in an upward trend, they tend to stop around the 38, 50, or 62% retracement levels. 38 would be 1996. So I would say that if I were giving a technical analysis and somebody said, okay, what happens if we give up the ghost here at 2050? I'd say look at around 1995, 1996 for support for technicians to come in and buy that. Beyond that, 1960 would be a real strong support level. You start getting through these areas, and then we're talking about retesting the February 11th low. Any of that is in the realm of possibilities. I think probabilities, when I look at other technical indicators that I continue to show you, is that we do consolidate a little lower. But let me show you those. The MACD, moving average convergence divergence, you can see the trend here, and that's counter to the trend we've been seeing in the S&P 500 itself. But you can also see it begin to turn. This histogram is an earlier signal. So if that were to continue and we were to get above this trend line, then suddenly the technicians turn upside down, and then you start looking at some real momentum. particularly if we get above these trend lines. So that would be a positive. We're just not at that point yet, so you can't really say that that's something we should take to the bank just yet. Same thing, same kind of story with the relative strength line. So the technicals are improving. This is an improvement up here, but you wouldn't say yet that this market is ready to overcome poor seasonality, May and June, fear over the Fed and the prospects for the referendum in Great Britain on June 23rd. Lots of stuff to talk about, but I think for one day that's probably enough. So I'll leave it there. Hope you have a good rest of the evening, and I'll be back very soon. Thanks, folks. Bye-bye.